Accounting conventions. There are 4 accounting conventions: convention of consistency, convention of disclosure, then materiality, and conservation or prudence. So I will explain some more detail of each one of this. First one is convention of consistency. In order to compare the results of different years, it is necessary that we should follow the accounting rules, principles, conventions, and concepts. And these should be followed consistently and continuously. Because if frequent changes are observed in the accounting treatment, then we cannot rely on that financial statements. Understood? For example, if a firm chooses cost or market price, whichever is lower method for stock valuation, and written down value method for depreciation to fixed assets, then it should be followed consistently and continuously. Right? So here consistency also states that if a change becomes necessary, then the change and its effects on profit or loss and on the financial position of the company, that should be clearly mentioned. So that's about convention of consistency. Then the next is convention of disclosure. So according to the Companies Act 1956, a prescribed format should be followed in which the financial statements must be prepared. So every company that fall under this category has to follow this. Okay. Then the various provisions are also made by the Companies Act to prepare these financial statements. And what is the purpose of this? The purpose of these provisions is to disclose all the essential information so that the view of the financial statement should be true and fair. And here the term disclosure does not mean all the information. It means disclosure of information that is significant to the users of these financial statements, that is investors, owners, creditors, etc. Okay. Then next is convention of materiality. So according to the Companies Act, what all things a company should disclose and what all materials, what all the things they should disclose. That is, a company shall disclose by way of notes additional information regarding any item of income or expenditure which exceeds 1% of the revenue from the operations or rupees 1 lakh, whichever is higher. Understood? So they should disclose all the additional information which is either related to income or expenditure which is exceeding 1% of the revenue from the operations or 1 lakh, whichever is higher. Then a company shall disclose in notes to accounts share in the company held by each shareholder who is holding more than 5% share, specifying the number of share held. Then the last one is conservation or prudence. This is actually a policy of playing safe because for future events, profits are not anticipated, but provisions for losses are provided as a policy of conservatism. So under this policy, provisions are made for doubtful debts as well as contingent liability. But here we do not consider any anticipatory gain. So that is conservation of prudence.